Good morning, everybody. Cowboy here. It is Monday morning, 8:30 a.m. EST, and we're going to jump right into the data. We have an important week. We have the FOMC that is going to be on Wednesday. So let's go ahead and take a look at the calendar, see what this week's going to look like overall, and then we will jump into the charts. So, see here. Today, the 16th, not a lot of data happening today. I know there's a holiday in China right now, so that might dampen things a little bit. As far as like currency markets and overall markets, might not. It's hard to say. Tuesday, a lot of Canadian data coming out there. CPI. You have some U.S. data, core retail sales coming out, and that's Tuesday. Let's see, pretty early, right about right now, actually. So 8:30 a.m. Tuesday. So that'll put a little spring in the step here as we open the show, and that should affect all the markets too, not just Forex. It should affect stocks, crypto, you name it. That is a red envelope. That's a high impact event. But Wednesday is the big one, and so Wednesday is going to be probably really slow leading up to the FOMC statement. In fact, I don't know if we're going to have a show on Wednesday. I know usually the days that are FOMC, everything's like super calm, pretty quiet days there. So we'll see about it. I'll talk to the Guerilla, and we may elect not to have a show that day. We'll see about it. And but that's big. Yeah, we're going to find out what's going to happen. There still are a lot of people who think we're going to see a cut on Wednesday, an interest rate cut, and that should affect markets at least in the short term, should push markets upwards. But it's hard to say. That can have the opposite effect, especially if you see more than one cut in a row. You see a couple of cuts happen, 2-3 months in a row, you start to see the markets actually fall, and that's pretty typical. There are a couple of theories behind that, but we won't worry about that right now. Everything that I really need to know is going to show me in the charts. Really, that's usually how that goes. The most efficient mechanism is going to be the market itself telling us what's going on, right? So let's see here. A little more data from New Zealand and Australia in the evening US time. Thursday at 7 a.m. EST is going to be the British, the monetary policy summary, official bank votes, and bank rate. So same thing as it is on, the FOMC on Wednesday, which, by the way, Wednesday is going to be at 2 p.m. EST, right? And then again, like I said, 7 a.m. EST, the British pound version of that. So that will put, it should affect all the markets, but really it's primarily going to affect, British markets, whereas the FOMC should affect all markets because that's very much going to affect what a lot of other currencies are thinking about doing as well. Also, 8:30 a.m. EST Thursday, unemployment claims. That generally has an effect, but we got to be careful on Thursday. Thursday is a landmine day. I would be real careful trading on Thursday because the Bank of Japan policy rate is going to happen, and they don't tell you what time they're going to talk about that. That's the only thing about it. They don't tell you, and we know what an effect the Bank of Japan policy rate had last time around. When they decided to cut their or hike their rates for the first time, and or I should say for the second time in 20 years, the month before or the month before that being the first time in 20 years. So Thursday is going to be kind of a landmine. Be real careful. I wouldn't have any large positions on Thursday. Be real careful with that because again, they don't tell you what time. They don't tell you what time they're going to talk about that. So careful on that. Friday, Canadian data coming out, and that's about it for Friday. So, Thursday, if the BOJ data comes out relatively early, then we might end up seeing, seeing some great volatility. But if that hasn't happened yet, I'm not touching the markets on Thursday. That's probably going to be almost as important as the FOMC. See, and what they do might be affected by FOMC as well through the day after. So for the moment, though, let's take a look at the charts. Looking at Bitcoin here, made some nice money on Bitcoin yesterday over at Algo Factory, took a nice short, and this is the daily chart that you're seeing here, right? So we're zoomed out pretty far, and I do think price might head down a bit more. How did I know to take a short? besides the fact that the algos told me, we do have what is a very clear move down right here, the prior move down. Get the proper line here. And if we attach a Fibonacci retracement tool to that, we'll see that price made its way back up to the 618, which is a pretty clear and popular place for price to go. So price actually came back up to this 618 right there. And the algos did tell me that things were stalling out. And then eventually we saw not exactly a double top, but on the lower time frame, the 30-minute time frame, price tried to rally up. Well, let me jump in there and it'll demonstrate that here. Looks like it's going to head down now. As a matter of fact, might have to, let me see here. Might have to get a trade on here. Yeah. Yeah, maybe. But at any rate, on the 30-minute, let me zoom into that. My algo pinged, but it pinged a bunch of times. What mattered really was the price action. And again, price action is really going to be king no matter what. But you had this rally up, that final move to the top, that 618. Price rejected and then tried to retake that 618, which also is a very important area, 60,000, 61,000. That's a really important area for Bitcoin going back several months, and rejected. And there was a bit of a lower high. So, it was a good probability the price would head down. And then, of course, I had my algo ping right there, that red tab that you see. And I took that move down, and I got out pretty much at the bottom of it. So that was a great trade, and we all did that over at Algo Factory. They got to see me do that all at the same time, right? As I entered, as I exited. CHD, good to have you on. So yeah, it was, dude, beautiful trade. Absolutely beautiful. Now, do I think it's going to go down again? It's possible, but you're starting to see, this is a pretty long extension, right? But the algos do have a bit of bearishness left. It's a little tricky in the algos right now, but I do think there's room to head down a little bit further. And if I were to, let's bring out the liquidity maps. We have that. So above price, top side, you've got a little bit of liquidity from 59,800 to about 60,100. So we'll mark that on. I don't think that's quite as important right now, but we will still put it on there. And I'm going to go to a lower time frame for that. Okay. So 59.8 to 68, more or less 60,800. Let's make sure I've got that. I may not have that right. Let's revisit that real quick. Okay, so 59.8 to 60, just 60,000. Okay, that sounds more right. Let me zoom in a bit. So right up to about 60,000. Is that right? Am I saying that right? It just doesn't feel right. $59.8 to 60. Yeah, that's it. Okay. Seems wide. And then you have liquidity kind of scattered all below price. Obviously, this is where a lot of the leveraged trades would get stopped out. So it's kind of a key bit of data. It's how I knew how to take some lower targets yesterday. And it's we have some blocks, 58.175 to 58.5. So here's 58,500 to 58,175, basically right about here. So price wants to head down there, and I think it's going to do it right now. I mean, it's pretty much right there. And then you have some more, very close. The main stack that I would be concerned with, though, is going to be sitting at 56.9 to 57.3. 56.9 to 57.3. So 56.9, and here's 57.3, which happens to be a fib level as well. I think that's going to be a 382 on the much higher time scale. So I think now price could always run up and grab the liquidity that's above, right? It could, but I think that we will see prices now gathering the liquidity that I just erased. So the move down was appropriate. And I'm going to design this trade, but I'm going to design it in front of Algo Factory Private. So let me go ahead and set that up right now. Come on over to algofactory.tech. The website is algofactory.tech, and you can see a QR code in the top right-hand side of the screen. We teach people how to be traders. We teach people how to build their own trading method, and that's actually the big secret in trading. Most people think they're going to get rich trading somebody else's method. And the reality is you don't have the psychological strength usually with somebody else's method, right? Plus, you just don't understand trading that well if you are just kind of adopting somebody else's method. So what we do is we help you learn how to trade, teach you the market, teach you some different ideas, and you formulate your own trading method. And you use that to extract money out of the markets. We're actually pretty successful doing that. We have some clients who've been with us, some of them for a short time, some of them for a longer time. Some are building it on, just a few hours a week, and that might take them a little bit longer. Yeah, the people who do it, they just dig right in and they're done in a few weeks. So we have a lot of really good stuff to show you over at algofactory.tech. Don't forget, trade your job, upgrade your life, and we'll see you on the next one.
Join us or die.